Cast is now starting. All attendees are in listen-only mode.
Hello and very warm welcome. Good morning, everybody. I am Devarsh from HDFC Securities Retail Research, and I'm joined by my two colleagues, Nagaraj and Nandish. Good morning, Nagaraj.
Good morning. I welcome everyone to mid 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 market outlook.
Yeah. So this is our fortnightly market outlook where we are joined by our two colleagues, Nagaraj and Nandish. Good morning, Nandish.
Good morning, Devarsh bhai. Good morning, all, and welcome to this webinar.
Okay, Nandish is having some technical issues, so we'll be able to hear him. We may not able to see him. But anyway, we'll start. So the flow of this webinar is that we usually give the technical outlook and the derivative outlook. Also, I talk about the global developments, what has happened in the international markets, important events, and also where we are headed. I would like to discuss today whether interest rates have been peaked or is it just a pause and afterwards we'll going to see more rises or not. How bad news for the economy is good news for the stock markets. Where are US treasuries and dollar index are headed? What are the implications of them in the Indian markets? We'll also discuss a little bit about crude and gold and how they are placed, how smaller stocks in US and India is doing. All these things we would like to cover, but I'll come in the end. First, let me invite my colleague Nagaraj to present the view from the technicals. Over to you, Nagaraj.
Thank you, Devashbhai. Is it my screen is visible? Is my screen
Yes.
visible? Okay. Hi.
Very good.
Good morning. Okay. Good morning, friends. Welcome to Fortnightly Market Outlook webinar. I'll speak about the technical aspects, and without wasting any time, we'll start with the market outlook. This is the daily chart, friends. What we can observe on the daily chart.
Nagaraj, it is small. You need to put it into that screen.
Okay. Okay. Right. Yeah, I think it is visible. Okay. Yeah, on the daily time frame chart, friends, what we can observe is market showing a small range movement over the last a couple of sessions and a long upper shadow. Technically, long upper shadow is indicating that there is a strong resistance for the market around 19,850, 900 levels. And overall chart pattern remains positive in the last 3 weeks. A market movement. If you can look at the chart, that after bouncing back from the bottom of 19,835 levels, 18,835 levels, market has continuously moved up by higher tops and higher bottoms in the last 3 weeks. What we can observe, the resistances have been taken on the upside one after another. We have seen the market showing upside breakout of the initial resistance of 19,300, and recently we have seen upside breakout of 19,500, 550, and currently market is placed, Nifty is placed at the hurdle of 19,850 to 900 levels. So initially we have seen some endurance. Later on, market has picked up its momentum. The opening upside gaps are remains intact. Most of the gaps are remains unfilled. One or two gaps have been filled, but Nifty has taken support of that gap and continuously moving up. All these patterns, all these indications are looking positive for the market. What we can observe from here, having broken above the recent hurdle of 19,500, 550 levels, there is a possibility of some more consolidation in the next one or two sessions at 19,850, 900 levels. As we can observe, these long shadows more often indicates the selling pressure emerging at the higher levels. And after this small consolidation or a minor decline, we could eventually result in a decisive upside breakout of 19,850 levels in the near term. To look at the next slide, this is a daily chart, daily Nifty line chart. In fact, what we can observe is the main median line is a 200-day EMA. Over the last couple of years, this 200-day EMA has acted as some significant reversal points for the market to behave on either side. These boxes are indicating that market behaved extremely on the either side after the breaking or taking support of this 200 EMA. In this first one boxes, we can observe that Once it breaks above this 200 DMA, again more than 1,000 points. Once it breaks below 200 DMA, lost more than 1,000 points. Here also similar kind of a thing happened when it has taken support of this 200 DMA. More than 1,000 points rally have witnessed in Nifty, and here also after showing a false downside breakout of this 200 EMA, Nifty has witnessed a decisive upside momentum from here to almost here. What we can observe in the circle is that recently at 18,830 levels, Nifty has taken support of this 200 EMA. Again, we anticipated in our previous weekly report that having taken this important support of this 200 EMA, as happened in the past, we had anticipated Nifty to show some significant upside momentum as per the theory, as per the behavior of the Nifty during its upside breakouts, taking supports at 200 EMA in the past. That's what exactly happened. We have gained around 1,000 points from the lower levels. From the bottom of 18,830 levels, we have almost reached, Nifty has almost reached 19,875. Almost 1,000 points gain have been witnessed. So this is the some important significance is showing of that support. Even though market has placed at the higher level, still there is no indication of any reversal or any strong resistance unfolding for the market at the higher levels. Though there is a possibility of some consolidation, minor decline, we are likely to see upside. So the question is, on any decline, where would be the support? So friends, in this previous slide, what we can observe that upside breakout area of this trend line and also the gap area comes around 19,500 odd levels. So 19,500 is going to be the good support for the market. On any bounce, we are expecting the upside momentum to gather from the lower levels, but that is going to be a buying dips opportunity. And if you look at the weekly chart remains intact. What we can observe recently is the strong support that has initially that was a resistance, has broken. After that broken, this resistance has become a support. What we can observe in the last 3 weeks back, this support was broken on the lower side, and eventually that downside breakout has converted into a false downside breakout. This false downside breakout technically always offer a counter moves on the sharp side. This is what exactly happened. Nifty, after showing a false downside breakout, has witnessed a sharp upside momentum in the last 3 weeks. And we have seen upside breakout of the downsloping trend line as per weekly time frame. So overall chart pattern from the smaller to larger time frame on the Nifty is gaining its momentum. Uptrend remains intact. Market is showing upside breakout of resistances from one after to another. If you look at the long-term charts like monthly, what we can observe is the range bound actions over the last 3-4 months in a broader range. In fact, around 1,000 points of range for the Nifty over the last 4-5 months. And currently Nifty has bounced back from the lower range. Alternative candle pattern has been observed on the monthly chart last 5 months. We have seen 1 month of downtrend, another month of uptrend, again last month of downtrend, this month of uptrend. So I'm expecting, as per this this pattern, alternative moment, I'm expecting Nifty to maintain its positive bias. Already we have witnessed a sharp upside momentum from the lower levels, and I'm expecting this upside momentum, what we have gained in this November month, remain likely at least till the end of the month. So there is a resistance around 19,800-850 levels, and I don't think we are going to see any bigger decline from the hurdle. And mid cap has been we have seen a dream rally in mid cap and small caps. What we can observe, a strong upside breakout. Last 25 to 30 weeks, we have seen a phenomenal upside momentum in the mid cap stocks, except 2 weeks of sharp decline. At the same time, this moving average of 10-week and 20-week EMA has offered strong support for this mid cap, and last 3 weeks we have seen mid cap outperforming the large cap or a benchmark index in the near term. So this rally continued for small cap as well. The consolidation moment was there in the small cap. Eventually, the small cap has witnessed upside breakout in the last couple of weeks. So the new all-time high has been registered in mid-cap and small-cap in the last couple of weeks and last week, in fact, and Nifty is yet to show all-time highs. So, in fact, it is very much clear that broader market indices are outperforming the benchmark, and we are likely to see a more traction in the broader market, like stocks of small-cap and mid-cap segments. So, the conclusion is the short-term trend of Nifty remains positive with range-bound action. Nifty is now placed at the crucial resistance around 19,850 levels, as mentioned, and up move above 19,850, there is a possibility of sharp upside. So decisive upside breakout of 19,850, 19,900 levels could result in Nifty zooming towards new all-time highs above 20,222 levels, and any decline from here could find a strong support of around 19,500 levels in the near term. Sectorally, healthcare, FMCG, IT, automobile, real estate are likely to outperform, while banking, PSU banking, energy, metals could underperform a bit or could bounce back from the lower levels. The bullish trend is likely to continue in the broader market indices like mid cap and small caps for next week. One may expect sharp upside momentum in some of the selective mid and small cap stocks ahead. This is a summary of technicals of Nifty. Now, I would like to invite my colleague Nandish to speak about Nifty on derivative aspects. Over to Nandish.
Yes, am I audible? Thank you, Nagaraj. Am I audible?
Yes, you're audible. You can go ahead.
Yes, so I'm going to share how the market is looking from the derivative side. So let's straight away jump to the presentation. During the last holiday shortened week, we have seen short covering in the Nifty futures, where we have seen 0.5% fall in the open interest with Nifty rising by 1%. And this is the third consecutive weekly rise for the Nifty. Coming to Bank Nifty, we have seen long unwinding in the Bank Nifty futures at higher levels, where we have seen 10% fall in the open interest with Bank Nifty falling by 0.94% during the week. So for this week, Bank Nifty has underperformed the Nifty. Now coming to the option data, first of all, Nifty open interest put call ratio fell to 1.01 level on Friday from 1.15 levels last week. Amongst the Nifty option, we have seen put writing at 19,500 to 19,600 levels. In turn indicates that on the lower side, 19,500, 600 level to act as a immediate support. On the other end, we have seen call writing at 19,800, 19,900 levels. And as you can see from this option distribution chart, there is a strong open interest build up in 19,800 and 19,900 calls, which in turn indicates on the higher side, this 19,800 to 19,900 levels to act as a strong resistance. Coming to Bank Nifty, we have seen call writing at 40,800 and 44,000 levels. So that level might act as an immediate hurdle for the Bank Nifty. While we have seen put writing at 43,000 and 43,500 levels in Bank Nifty. So on the downside, we expect Bank Nifty to find strong support around 43,000 levels. Now coming to FIs, as we were discussing since last couple of months, FIs are net short in the index future, and they were creating fresh shorts since last couple of months. But during this week, we have seen first sign of short covering by FIs, and they have net bought worth rupees 1,900 crore rupees this week, with their open interest going down by 11,000 contracts. So we have seen first sign of short covering by FIs in the index future segment, and because of that, their long to short ratio has moved up slightly to 0.26 level from 0.22 levels last week. So though that ratio has moved up, they are still aggressively net short. Out of their total positions, their 80% of position is still on the short side. So if market were to do well from here, we expect a sharp short covering by them. So there is a higher possibility of higher short covering by FIs from here on, because they are still aggressively short, and we expect there could be a short covering by them in the coming days. Now, yes, coming to outlook for the Nifty. Am I audible?
Yes, you're audible, Nandish. You can go ahead.
Yes, yes. So can you go to the next slide for outlook? So this is the FI's long to short ratio chart. As you can see from this option, this chart, their long to short ratio has moved up to 0.12 at which we began the series to 0.26, but they are still aggressively short. During the month of September, then this ratio was around 2, and right now it is at 0.26. So they are still aggressively short, and we expect a short covering from them in coming days. Now coming to outlook, as we discussed earlier, there was a short covering in the Nifty future during the week. Put writing was seen at 19,500, 600 levels, and the first sign of short covering by FIs. All these three indicators indicates that this bullishness may continue. So we expect market to do well. One should remain long and accumulate longs on decline with stop loss of 19,500 levels. And on the higher side, 19,800, 900 will act as the immediate resistance. As Nagaraj has also discussed, technically also around triple top formation kind of patterns is built around 19,800, 900 levels. So those levels might act as an immediate resistance, but many mid-cap markets are doing well, and that trend might continue. And now coming to Bank Nifty. In Bank Nifty, we have seen first sign of short covering by FIs in the Bank Nifty futures also. We have seen put writing at 40,000 and 40,500 levels. These indicators indicate that though Bank Nifty has underperformed the Nifty during the week, if we were to see some correction from here on in Bank Nifty, that would be a good buying opportunity. So for Bank Nifty, our advice is to accumulate longs on decline with stop loss of 43,000 levels. Yes, on the higher side, this 43,800 to 44,000 levels are likely to act as a strong resistance where calls have been written. So aggressive longs should be advised above 44,000 levels. But if Bank Nifty were to fall from here, one can accumulate longs on decline with 43,000 as a stop loss. Now coming to sector analysis, there were three sectors mainly where we have seen long build-up, and those are auto, technology, and power. We have witnessed long build-up in many auto stocks, IT stocks which were underperforming till now, but during the last week we have witnessed long build-up, and also the power stocks. So these three sectors are looking good as per the derivative data. If one were to create a long, this auto, technology, and power stocks one should focus on. That is all I want to share from the derivative side.
Okay, thank you, Nandish. Now coming back to our presentation. So first and foremost, I want to show what has happened into the interest rates. So US interest rates have come down, and let's see what has happened into the US Treasury. See, as we know, US Treasury is one of the world's largest interest rates, and it is the world's largest market in the world. What we can see here is that the interest rates have more or less peaked, and at 5%. Is my screen visible properly, Nagaraj?
Yes,
Yes, there will be.
You can see the US Treasury chart, right?
Yes, yes.
Okay, so around 5% interest rates have peaked, and from 5% it has come down to 4.4% now. So this is the big fall which has happened into the US Treasuries, and that's why it is making all other asset classes more attractive as money is moving away from US Treasury. The another impact of this is the dollar index. So let's see what is happening to the dollar. As interest rates come down in US, the dollar becomes weak. So if you remember, those people who have been following us for long, we have been saying that that 99 dollar index has bottomed out and it should rally. It rallied up to 107, and now lately you can see from around 107 it has found a strong resistance, and it is now correcting, and it has come down to 103. This is the major reason why we are going to see a lot of money coming into the non-US markets, into the emerging markets. As dollar weakens and as dollar comes down, as US interest rates go down, all this other markets should start doing well. Now let's look at what has happened into Nasdaq. So from 12,600 levels, 14,000 levels, a sharp rally has happened, and it is almost near its all-time high. This recent 52-week highs, the index has gone up. Similarly, the S&P 500 index we can see that the index has gone from 4100 crossed 44 hurdle, and now 4500 levels it is trading. So it is also near its 52-week highs, and strong rally of 10% has happened into American markets. The interest rates and dollar has peaked out, and that means the environment for commodities will also improve. As you can see, gold fell to almost $1,850, $1,820. From there, a sharp recovery has happened. It has come back to $2,000. Now, if there is any global financial problem, or if there is any mishap in the international financial market, technically gold is placed so well that once it crosses this hurdle of $2,020, $2,040, a sharp rally to 2200, 2300 all-time high levels are possible. We reached a level of 2090 in August of 20 after such a sharp rise in interest rate. I'll show you the rise in the interest rate once again. See, interest rates in US were at 0%. Near 2020, it was almost 0.5%. From 0.5%, US interest rates has gone to 5%. This is a very negative environment for gold. All this while, gold, rather than falling, has beautifully consolidated near this level, 2000 level, 1900 level. So earlier, had the environment for gold was bad, it could have come back to 1400, 1500 level, but all this pain has been absorbed. And if US dollar goes down, as we expect this gold to go up to 2080. So good rally in gold is expected going forward. For India, one more thing which is very important is the Brent crude oil. And as you can see, when the attack happened and there was a problem in Ukraine, it surged to 130. Then it corrected back to 70. Recently, it went to 100. Now, from 100, it has corrected back to almost $80. So this $20 fall in crude oil is a boon for markets like India. We are a net importer, and as crude oil comes down, our macroeconomic situation improves. So this is the global setup. Interest rates are more or less peaked, and we think that it is headed lower. As we can see, a bad news of which is there for the bad news for the economy is good news for the stock market. As US economy weakens, as US employment data suggests that the unemployment is rising, they are unlikely to increase the interest rates. So as US economy weakens, it is good news for the other global stock markets. Treasuries have peaked, dollar has peaked, as we have seen. Crude oil and gold I've already showed. Small stocks are doing quite well. Let me go back to that screen and show you what is the situation of US small cap stocks. So as you can see, compared to other charts, which SPX chart I showed, US Russell 2000 or the broad index is still at near very low level of 1600 after peaking around 2400 level. And as recently as last couple of weeks, it is showing signs of bottoming out. It has first time crossed the immediate high and a higher bottom, higher top kind of a pattern it has generated. As interest rates come down or peak, smaller companies will be able to now navigate this environment. Now they should be able to do well. So this Russell 2000 is an index where broader markets are represented, and there we are seeing some signs of bottoming out for US small stock also. Till now, only magnificent 7 or large 7 US companies were doing quite well. Other all stocks were underperforming. The table has turned. US broad markets are doing well, and the larger stocks are struggling. Now let's go to the global markets. What is the situation in global markets? So as you can see, many global markets have started doing quite well. The Japan and Nikkei has gone up about 5% over the last fortnight, and now last 1 month also, 4 or 5% gains are already happened. US Nasdaq is also up by 5% in last fortnight, almost 4% last 1 month. Compared to that, Indian markets are subdued, especially the larger Sensex and Nifty. Compared to 4 and 3% moves over the last 1 month, Indian markets are more or less flat. But the action, as we have been telling in many webinars and in our midweek webinars, mid cap and small cap where the action is, and that's where money has been being made. That's where we have been indicating and suggesting a lot of fundamental and MTF ideas, and that is the market which is doing quite well compared to 2% rise in Sensex, 7% rise in Nifty small cap index over the last fortnights. Tell you the picture where the action is. Within this also, where is the index? Which are the pockets of strength? Real estate, metals, capital goods, PSU, healthcare is the pocket of strength. Consumer stock, banking are the weak spot where we have not seen any up move. FMCG is a struggler compared to other indices. What are FIs up to into Indian markets? So as you can see, they were extremely short from 21 to 22. They have been selling. From June, they have become net buyers. They have been gradually buying, and at one point of time, they become aggressively buyers. Now, gradually, they are reducing their long position. So FIs have sold off, and that means there is money to be. If the environment improves in India, this money can turn, this table will turn, and again, this bar chart will go back to highs. That's what we expect. Let's look at the various important events. So US and Japan will have holiday on 23rd November. In India, we have a holiday on 27th November. So these two are holidays. What are important events? FOMC meeting data will come on 21st of November, Tuesday. So that is one more important event which will solidify the belief that the interest rates have peaked. If interest rates have peaked, other markets should do well. Now, we have also released some of the reports. I would like to highlight them once again. So one report is the SIP picks, which was released in July. If you are a long-term investors, if you want to build wealth over the longer term, you can look at our DII SIP picks. Apart from that, we have also issued two reports. First is our long-term investment ideas, 1 year, that is Money Fest, somewhat 2020 Diwali picks. Last year Diwali picks on an average did double than the index. Our indices, our picks were up 20% on target compared to 10%, and if you happen to hold it till Diwali to Diwali, compared to 16%, 75% gains were the average return of our Diwali picks last year, and we have been consistently doing well compared to the indices. This year we have come out with another 10 set of stocks. We have already done a detailed webinar, and you must have received this file. It is available on our website. Go through this 10 long-term Diwali picks. Dr. Reddy, Equitas, Gale, Godrej, Grasim, Gujarat Alkalis, Indian Oil, Kalparu, Reliance, United Spirits. Apart from that, we have also issued 3 technical picks recently on Murat Day. Engineers India, Orient Cement, and Quest Corp. They had gone up. Recently, market has corrected, so they have pulled back. They are near the buying range. So I advise all of you to look at these Murat picks as well. So that's what we wanted to cover. Now, if you have any questions, we are open for that. Depending upon the screen you are using, you will see a question mark. Click on that question mark and window and type in your question. The question should flash in front of us, and we'll try to answer as many as possible. We have about 10-12 minutes to answer, so feel free to ask any questions. We will not be able to answer any stock specific query, but any query on our reports, on ideas which we have already generated, that we can discuss, or any other questions you may have. By the time question assembles, let me ask questions to my colleague so that you have time to put in your questions. So first, Nandish, if indices break out above 19,800 and 800, 900 levels, do you expect sharp short covering because FIs are quite short in the market?
Yes, Devarsh. So, as we have seen in last couple of months, there are multiple times we have seen resistance around 19,800 and 900 levels. Even from the option side, we have seen aggressive call lighting around those levels, which were visible from that option diffusion chart. So, if we were to close above 19,900 levels, I think yes, sharp short covering could come, as FI's long to short ratio is highly oversold around 0.26 levels. It is near the low, and in the bullish period we have seen that ratio reaching to even 2 to 3. So I think there could be a sharp short covering above 19,900 levels.
Okay. Impact of US small cap on Indian mid cap and small cap. Inderpal Singh is asking, so if US small cap index does well, we expect all global markets to do well because that's a broader market. It is an index of 2,000 stocks, and if that index starts doing well, we can expect a broader rally across the world. What is the outlook of PSU banking sector? Ankita Singh is asking. So outlook on PSU banks are relatively bullish. I also saw one more question on banking and finance from Tushar. Also, there is a question from Partha. What kind of short-term impact on banking sector due to change in unsecured loan by RBI? Tushar is asking particularly about Bajaj Finance. We won't be able to ask. And I saw Mihir's question, what will be the impact of RBI decision in financial stocks? So what has been done? The circular of RBI is that the risk weight on various unsecured loan has been increased back to 125, which was there before COVID. Now, because of the COVID, they had given some relaxation, which has been withdrawn. What is our take? Our take is that this is just like in our terms, let's say you are bullish on a stock, a customer is bullish on a stock, and say risk is asking for 30% margin for a stock. Now, due to some reason, due to volatility, the margin is increased from 30 to 35%. If customer is bullish, if you are bullish, and if you want to take a position on an FNO, whether margin is 30 or 35, you are going to take it because you are looking to gain much more from the eventual rise from the stock. Same way, if banks are bullish on the business, just by increasing the risk weight, they will not stop the business. That will reduce the pace of growth of the unsecured loan. They will try to put brakes, and that is the job of the regulator. Wherever they see strong uncontrolled growth, they will try to put some brakes, but that doesn't mean that the car has stopped. It is just a brake. The speed will reduce, and again it will keep growing. So the sum and substance of all this is that there will be some slowdown, but if banks see business opportunity, they will do that business and they will keep growing that book. So I don't see long-term impact of this circular on banks. Obviously, it's a short-term negative news. Some stocks have corrected. They may continue to correct. We prefer PSU banks more at this time compared to private large banks. And we have issued reports on them. So continue betting on them stocks. Buy on decline is the opinion on those stocks. I hope Tushar, Mihir, Ankita, Partha, all this answers your question. Sanjay Yadav is asking, wanted to know about infrastructure sector. So infrastructure sector is a broad sector. There are engineering companies, construction companies, contractors, designers. But overall, these companies are likely to do well in an environment where state elections are there and then central elections are there. So government will try to award as many contracts as possible and try to see some growth. See the agenda over all the parties, whether it is a ruling party or opposition, whether it is a state, any party, the economic agenda of every party is to show growth. Infrastructure is the visible manifestation of her growth. So they would like to see more bridges, more roads, more tunnels, all parties. And that's why infrastructure, which we are lack of there is a lack of infrastructure in India. We are in a dire need. So huge amount of buildup of infrastructure is likely to happen over the next 5-10 years, and we need to be bullish on them. Shorter term, we keep coming out with various picks on MTF. You can look at those. Cement companies are also looking good to us, and that's why we have also issued one of the stocks in the Muhurat picks. You can look at them also. Pradeep Garud is asking whether US interest rates gradually will decrease or not. So US interest rates are going to increase. Right now, the US futures, the interest rate futures are factoring in the first cut to come in June of 24. Earlier, it was May, before that March, but then last few meetings, it has been pushed back to June now. So June 24 is the area where US economy will slow down enough. There will be concerns over the growth, and at that time, US Fed will start cutting the rates. That is the current expectation. Rudra Pandey is asking about auto. Let me go back to Nagaraj and ask him. Nagaraj, Nifty auto index or any auto stocks, how are they placed technically?
Yes, recently we have seen consolidation movement in auto sector, and auto sector is right now shaped up very well, bounce back from the lower levels, and I'm expecting automobile sector is the one it has to show outperformance. And if you look at broader participants of auto sector, means Tata Motors, Ashok Leyland, and Mahindra Mahindra, Hero Moto, Bajaj Auto, they are placed very well on the charts. So I'm bullish on the auto sector for the near term.
Okay, all right. I think I've answered all the questions which are there on the screen. I hope this has been useful to you. We will keep coming out with various recommendations on the index, shorter term and longer term. I hope you keep using them. If you use research and if you improve the adaptability, customers will earn, and you will also be able to do a lot of other business and targets. Okay. Thank you all for joining. Thank you, Nagaraj. Thank you, Nandish.
Thank you.
And this is the end of the webinar. Thank you all for joining, and have a great weekend ahead. Thank you.